Remember, crypto is a brand new asset class. It might trade like penny stocks, but it's not stocks. It might look like the Forex market, but it's not the Forex market. Let me quickly touch upon two risks to the crypto space. One, capital loss. These assets are extremely risky. They've been known to pull back 80%, 90% sometimes. So you have to understand, if you're sitting on a loss, it might make sense to get out of it and move on to the next trade. And one more risk is asset loss. And this is specifically endogenous to crypto because if you don't properly secure your private keys, you're at risk at losing your entire asset. You can't really do this in the stock market. Nobody can break into your TD Ameritrade or E-Trade account and steal your stocks. However, in crypto, if you don't secure your private keys, you can lose your entire investment. So keep these two risks in mind when you're moving into these markets. When you're buying or selling crypto assets, there are some catalysts you might keep in mind that will drive prices up or down. Now, some of these are specific to crypto, but others happen in other asset classes as well. So the first one I want to point out is added to a larger exchange. Now, we saw in December of 2017, Bitcoin Cash was added to the Coinbase exchange, and the price of Bitcoin Cash went up 200, 300% in just a day. So there became a trade where other market participants were trying to predict what would be the next asset that's added to Coinbase. Next, corporate partnerships. And this is going to be large in the years ahead. If some of these cryptos start linking up with major corporations such as Microsoft, Google, or Amazon, this is something that can drive the price up. Now, crypto is trying to decentralize everything, so the idea that they're going to link up with corporate partnerships might raise skepticism with Bitcoin maximalists. Another catalyst is forks. What a fork is if you own the specific coin and the blockchain forks, you receive an equal amount of coin in the next fork. So if you own Bitcoin going to the Bitcoin Cash fork, let's say you had 5 Bitcoin, you receive 5 Bitcoin Cash when the protocol forked. Another catalyst, government crackdown. And we've seen over the years that governments are trying to regulate cryptocurrencies. For instance, in China, it just seems to be a cat and mouse game where the government comes, shuts down exchanges, and the price of Bitcoin sells off. And then they say, we didn't want to shut them down, or they allow for more trading, and the price goes up again. So keep an eye on regulations, especially now in the United States as the SEC and the FINRA start thinking about how they regulate these crypto assets. And lastly, FUD. Now that stands for fear, uncertainty, and doubt. And this is a general malaise that happens when the Bitcoin markets have a significant pullback. This is a tone that just seems to be in the air that doesn't allow prices to go up. So these are important catalysts to think about when you're moving into these markets.